Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report. Today we're going to look at the difference between what our Reserve Bank is saying about global inflation and what the rest of the world is saying. Last week our Reserve Bank came out and said that it was relatively relaxed about inflationary expectations in New Zealand. It believed they would stay anchored within the 1 to 3% target band that it has. It also said it saw the oil price dropping below $100 a barrel within the next couple of years, and it said it was willing to look through this shock in commodity prices. The overall tone from our Governor Alan Bollard was that inflation was spiking up right now, but it would go back into the target band within a couple of years. We didn't need to worry about it too much. He was more worried about a slowdown in the economy, and he flagged therefore a cut in the official cash rate later this year. Now that meant that on wholesale markets, interest rates went down, and within a couple of days, some mortgage rates fell in New Zealand as well, and the key two-year rate fell from 9.4% to 9.2%. So our Reserve Bank Governor is relatively relaxed about inflation. Now let's look overseas and see what people are saying there. In the last couple of days, we've seen some very strong comments from the US Federal Reserve about how much of a risk inflation is. The Governor of the Federal Reserve there, the chairman of the Fed, Ben Bernanke, has come out and said that inflation expectations are at risk of rising and that he will act decisively to stop them from rising. Now people think this means the US Federal Reserve is going to increase interest rates later this year. We're also hearing from the European Central Bank that it's very worried about inflation and is thinking about increasing interest rates as soon as July. And just a few days ago, China, now our third largest trading partner, it sharply tightened monetary policy by increasing its reserve asset ratio for banks because it too is worried about inflation. So we have an interesting clash going on here, where our Reserve Bank Governor is not so worried about inflation. The rest of the world's Reserve Bank governors are. This is at a time when the oil price is well over $130 a barrel. Now what does this mean for us here and for our currency? Well, it means that our currency is slightly less attractive to overseas investors because the gap between our interest rates and overseas interest rates is falling. And that is affecting our New Zealand dollar. The New Zealand dollar has dropped in the last week or so from nearly 78 cents to around 75, 76 cents. This is increasing the inflationary pressure in the New Zealand economy and was part of the factor in the big rise in petrol prices to $2.06 or 7 in the last few days. An interesting clash between our Reserve Bank and the rest of the world's reserve banks, which suggests, and we believe, that our Reserve Bank is being less concerned about inflation than it should be. I'm Bernard Hickey. That was an economic weather report for interest.co.nz.